Hello, everybody. Welcome to the Trading with Ashley show. I absolutely love earnings. This has been the most incredible week for trading options, and I have tried to come up with a lot of plays for all of you that are safe or at the very least will give you a stock at a really great discount, a quality company. So I've got another one for you today, and this one's on Coinbase. But before I get to that, I wanted to congratulate somebody in my community. We have another millionaire. It seems like every day we get word that we have another millionaire. This one is Mike, SoCal Mike. We are so proud of you. Now, he has been with me about a year. Now, Mike is somebody that has raised over $400,000 in less than a year to cross over that $1 million mark. And it's really sweet. He remembered seeing me when Keenan Grace and I had done a video together. And so he said at that point, he realized that he wanted to join. And now that he's in, he is very happy and he is counting all of his money. We're very excited for you. But what makes me feel most special about what Mike said was that he said it's the mentors in the community and the support that helped him get to his goal. So I'm so excited about what we offer within the community. I just want all of you to know that really want to learn options, that there is support out there and you really can learn this. I do not want one person feeling like they cannot grasp this. It doesn't happen overnight, but if you have the right support around you, you can learn options and nobody can take away this knowledge from you once you have it. All right, let's go take a look at a potential play on Coinbase because Bitcoin drives a lot of the Coinbase action that we see. Now, Bitcoin is over 100,000, but we're not up at the heights that it is up. So if you believe that Bitcoin might run a little to the end of the year with the Christmas rally, then this might be a reasonable play for you to consider. I do like trading Coinbase because it offers a lot of premium. It's a volatile stock. So when I select the strike prices, I want to be super conservative. But you can still get a lot of great premium even if you're being conservative. All right, let's go see what I have cooked up for you today. The first thing we're going to do is take a look at Coinbase so we can get a better understanding of what we're about to potentially trade. Now here you see October 30th is the earnings date. So I want to look at the analysis tab and I want to look at their profitability. And they definitely are profitable. I see this right here. You've got the revenue and then the earnings. Now, they did beat earnings last quarter. This quarter, we're just waiting to see. It looks like they may be a little bit below expectation, but we'll just have to wait and see when that plays out. But let's go look at the chart to take a look at the technical so that we can get a better sense for the level of support so that we can make the most profitable and safe trade. So we are over 50 on the RSI, and most of you know when we're over 50 on the RSI, a fair entry is right here at the middle of the band. Well, we're trading there right now. So I don't want to take that much risk, so I am going to go a little bit lower. I'm actually going to shoot for the bottom of the band, something around that 315 area. Actually, it looks like it's closer to let's say about 310 would be a safer bet. Now, I want to do one more thing before I select the actual puts that I'm going to sell or if I'm going to do a put credit spread. I want to look at the expected move. So we're going to go do that next. Now for the expected move, I'm going to go to the first expiration date available. It happens to be the day after earnings. So it should be pretty accurate, but Coinbase is pretty volatile. So you just have to keep that in mind. So what we do is we take the at the money put right here. This is the premium. It's that $14.79. And we add it to the call premium, which is $15.53, that equals 30.32. Now, for one standard deviation, we multiply that by 0.85. So what that gives us is 25.77. So we'll round up and just say $26 up or down. So if you look at 355 where it's trading now and you subtract 26, now you're looking at about 329 is the expected move. But for our trades, we're going to go far below that just to be careful. So if you wanted to take the risk and trade right after earnings, that would be a bit of a risk, but you could, and you could go down to 310. You see here, the delta is very small. There's less than a 10% chance that it's going to hit here, but you would be paid about $165 to put up $31,000 to buy the shares. Now, if you really want Coinbase and you're going to utilize a drop to get Coinbase, this really isn't a bad option for you because you'll be getting it well below current pricing. But if you want to go a little bit further out, what we can do, let's look at 1121. Let's stick with something around the same. Let's look at that 310 level. Now you're getting paid significantly more. Now it's looking like you'd be paid $730. So one of two things would happen after earnings. If it pushes ahead and it pushes forward and it goes up that $26 or more, then something that you were paid $730 for, this should whittle down rather quickly. And this shows you how much it'll go down. So you see here, this is 20 cents a share, about 20 cents a share. This will go down that much right here, this 730. But if we get closer after earnings to the 310, then this will start to increase, which means it would be more to buy it back. But I would never go into this trade unless you really intended on purchasing Coinbase at this level. So 310 at the 1121 expiration, you would get the 730. This is another great trade. Now, if you want to look at a credit spread, I'm going to go even further out for safety because I like to leave you the flexibility to get out of these trades, and you need time to do that if it works against you. So for this one, I am going to select 12/19 of 2025. I'm going to start this trade off right here at the 250 mark, and I'm going to go down to the 230 mark, meaning I will sell the 250 put, but I will buy the 230 put. I get to keep the difference, and it will require $2,000 to put on this trade. Let's go see what it looks like on a ticket. If you were to put on this trade, you would receive a net credit of $1.30 a share, and that's if it stays about where it is now when you put this on tomorrow. This could skew either way. But if you were to put on this trade, it would require about $2,000 to do so. Here's the $130 that you would receive. And the reason this does not say $2,000 is it's giving you this credit right here. So your true risk on the trade would be $1,870. And that would only be the case if by your expiration date, December the 19th, Coinbase is trading at $250 or below. So this would be a decent trade to put on. And then if you wanted to do risk mitigation, if this happens to whittle down this $1.30, once it whittles down to about 60 cents, that would be a 50% profit at that point. You could go ahead and close out this trade. Now, I would take a much closer look at this trade. If Coinbase goes below 300, then I'd want to keep a very close eye on my 250 and make sure that it bounces before we get anywhere close to that. Otherwise, I would just close for a loss. I hope that gives you a few ideas. If you have followed any of my trades in the last couple of weeks, you are up quite a bit, and I'm happy to know it because I love helping all of you make money. Remember, if you're with me, Trading with Ashley, there is a no trader left behind. I picked out one more video for you to watch in case you can't get enough of learning options. Here you go. It's right here.